Hey guys, my name is Evan, and welcome to Evanomics 101, your number one source for every econ. The biggest IPO in history happened last week, and investors are asking a simple question: is SpaceX the next great American company or the most expensive stock Wall Street has ever seen? The company opened up or debuted publicly at a valuation above 1.7 trillion and quickly surged beyond 2 trillion in market value, making it one of the largest publicly traded companies that we've ever seen. Today, we're going to break down why investors are pouring money into SpaceX, whether Starlink is the real reason behind the valuation, and what the future of the company could look like by 2030. Before we jump into the video, I do have a quick favor that really helps grow the channel. If you enjoy economics, investing, and breaking down the biggest stories happening in the global economy, please hit the like button, subscribe. It helps more people discover the channel and allows us to keep producing deep dive content like this. All right, let's go ahead and hop into the video. So, for years, SpaceX was one of the largest, most valuable private companies. Now, public investors finally have access. But here's what's interesting about this. This isn't a traditional aerospace company. Investors aren't just building investors buying a rocket manufacturer. They're buying exposure to multiple industries at once. Within SpaceX, for the most part, you get a satellite internet company, launch services, defense contracts, artificial intelligence, and potentially the future of space infrastructure. That's why the valuation debut has become so interesting. Some analysts believe SpaceX could justify its enormous price tag over a long period of time. Other others believe that expectations have gotten out of control. So we're going to pivot and talk a little bit about Starlink. Okay. So if you strip away the headline, Starlink generated more than 11 billion in revenue during 2025 and represented the majority of the company's profits. Some estimates suggest it accounts for roughly 70-80% of SpaceX economic value. So why is this? The reason why, because reoccurring revenue. Wall Street loves subscription businesses. However, every new Starlink customer creates predictability, predictable monthly cash flows. That with traditional launch services, where revenue arrives project by project. Investors increasingly view SpaceX as a telecom company disguised as a space company. There's a huge difference in the two of those. And it helps explain why investors are assigning technology style valuations rather than your typical aerospace style valuations. Now let's talk about the long term opportunity. Historically, getting anything into space was incredibly expensive. Reusable rockets, for the most part, changed that. Every reduction in launch costs expands the number of industries that can operate in space. So, communication, navigation, Earth observation, defense, as well as scientific research. If launch costs continue falling entirely, new industries could emerge. Think about how cheaper computing led to cloud computing. Cheaper space access could create a similar economic revolution. This is the future investors are betting on. We're going to talk now the risks that really nobody is talking about when we're talking about space, when as it relates to SpaceX. So this is the kind of uncomfortable part, and it's surrounding the valuation. SpaceX reported significant losses after integrating its AI-related businesses, despite strong growth and profitability from Starlink. The challenge is really simple. At at these valuations, investors are paying for today's earnings. They're paying for future possibilities. So if you're paying for future possibilities, that means execution has to be nearly perfect. Okay, so any major launch, any regulatory challenge, any slowdown in the of Starlink is going to affect SpaceX, and it could cause investors to rethink their expectations. And when expectations are extremely high, even good results can disappoint the markets. Right now, we're going to take a quick pause. If you want like this, covering markets, inflation, Federal Reserve, stocks, the biggest economic trends that are shaping the world, please make sure you're subscribed. We're turning complicated economic stories into easy to understand explanations every week. Now let's hop back into the video. So looking ahead to 2030, there's several possible paths. Okay. Let's talk about, I guess, the first or the most bullish case scenario. Starlink continues expanding globally. Products become meaningful revenue drivers. Starlink lowers launch. SpaceX a critical infrastructure for governments and businesses worldwide. Okay, base case scenario. Talk about a case scenario or a more conservative scenario. Growth competition increases. Capital spending remains massive, and investors decide that the valuations kind of got ahead of the reality. Probably falls somewhere in between those two. But one thing is clear. SpaceX has already forever. The question is whether it can transform global communications and AI as well. To wrap everything up, to pretty much take away of today's video is basically SpaceX isn't simply a rocket ship company. It's a lot more. It's becoming a platform company built around infrastructure, AI, and space transportation. That's why investors are willing to pay such extraordinary prices. Whether those prices prove justified remains one of the biggest questions in the market today. If you enjoyed this breakdown, hit the like button, subscribe to the channel, and let me know in the comments. Would you buy in today's valuations? This is Evanomics 101, helping you understand the economics behind the headline.